Hi, welcome to Policy Provisions. My name is Laura Armstrong from San Antonio, Texas. In this segment, we're going to be talking about some common policy provisions. Now, policy provisions outline the rights and responsibilities of the policy owner and the insurance company. Some common provisions include the ownership rights, maintaining the policy, beneficiaries, and exclusions. In this segment, we will be specifically talking about beneficiaries. Now, most of us tend to not pay a lot of attention to all the details of an insurance contract until someone passes away. For most people, money may be a concern. Let's say we have a spouse that lost their husband. Well, they may remember that they have coverage, but they don't know exactly how much. And they don't recall whether the spouse was the beneficiary or the children were the beneficiary. So let's talk about what would happen in those cases. So when we look at beneficiaries, there's different types of designation. We have the primary beneficiary, the contingent beneficiary, the beneficiary designation, whether a policy will be revocable or irrevocable, and the common disaster clause. So let's take a look. Now, a primary beneficiary will be the individual that will have first claim upon the death of the insured. So once the insured passes away, the primary, as the word implies, will be first. So they will have first claim to the death benefit when the insured dies. Now, a second level of priority is known as a contingent beneficiary, also known as a secondary beneficiary. Again, as the word implies, secondary means second. So they would have a second claim to the death benefit if the primary beneficiary died before the insured. Now, one of the ownership rights is for the owner to assign the primary and contingent beneficiaries. So what types of beneficiaries can I assign? Well, a policy owner could designate an individual. They could name one person or more than one. They could designate it by class. An example of that would be designating all my children. We could also designate a minor, or a state, or a trust. So let's take a further look. Now that the policy owner has taken careful thought in designating the beneficiaries, the company wants to make sure that they honor that they honor the intent of the policy owner. So now we're going to be discussing common disaster clause. What happens when the insured and the primary beneficiary die in a common accident? Well, the common disaster clause says that if they died in a common accident, it will assume that the primary beneficiary died first, which means that the proceeds will be paid either to the contingent beneficiary or the estate of the insured if no contingent was named. Again, the common disaster clause is just to keep in line with the intent of the policy owner. Now, the policy owner can also choose to exercise their right to make the beneficiary either revocable or irrevocable. So the beneficiary designation means that if a policy is revocable, the owner retains all the rights to name the beneficiaries. It means at any point they could make changes to the beneficiary. So if a beneficiary is irrevocable, now the owner must obtain the consent and the signature of the beneficiary to make any changes. So in a sense, it puts the beneficiary in charge of any changes. So in summary, we've talked about the beneficiaries, which includes the primary beneficiary, which is the first person to receive the death proceeds, the contingent beneficiary, which has second claim to the proceeds, the various beneficiary designations, whether a beneficiary is revocable or irrevocable, and the common disaster clause. The purpose of the common disaster clause is to protect the intent of the policy owner. I hope you found the beneficiary section helpful, and I wish you luck.